Good morning. This is Tom Alexander. It is Sunday, June 2nd. It is about 9:30 a.m. Eastern Time in the U.S. I'm in beautiful Charleston, South Carolina. And this is the weekend update that I do every weekend. And let me show you something here. This is the website. You can go to the website. If you're not familiar with this, alexandertrading.com. Click on weekly update, and you can get this weekend's update. I don't have it posted on here yet, but I will. By the time you see this, it will be posted. All the weekend updates going back, I don't know how long, a long time, and you can check out my work there. I also do a daily report for members that includes the transcript of everything said in our live trade room. It is both an actionable and a learning tool. I send out free updates occasionally. If you're not on that list, shoot me an email, tom@alexandertrading.com. I'll put you on the list. Okay, let's talk about last week. Now, last week, I said that in my report, and again, you can go to the website, you can read that, exactly what I said. Basically, the gist of it was I didn't know what was going on. And I've been trading 38 plus years. And guys, there's simply times you don't know what's going on. And anyone that is always telling you exactly what is going to happen and has an exact price target, an exact level, hasn't really been trading very long or doesn't trade at all. There's simply times in the market, and I don't care whether you're a technical trader, a price action based trader like I am, a fundamental macro trader, there are times when you just don't know what's going on. And at those times, it behooves you to just stand aside until you can figure out what's going on, what fits your understanding of the market. Now, my understanding of the market comes from a read of the market through the lens of auction market principles, price action, and sometimes it's clear. Most of the time, you can have an idea about what's going on. It may not be tradable, but you can have an idea about what's going on. Sometimes you find yourself in a position where you don't have a clue, and you wait until something happens and it clears up. We had that event on Friday. Now we have really, really good parameters as we head into next week and some guidelines, objective guidelines regarding levels and regarding what price action is likely to be on an if-then basis. And basically, all the indices now are in sync, and that's something that's very important. All the indices behave the same on Friday. We had this big dip into late afternoon, and then we had this huge rip into the close, a historically huge rip in a short period of time. Now, the attribution for that rip is that was end of the month, and no doubt it had to do with option positioning as well. Regardless of that, the price action alone tells you there was a tremendous upside conviction behind that move. There, you left a huge rejection, i.e., buying tails below the market. Now, are we going to have immediate follow through? We're going to retrace the whole entire thing. I don't know, but we do have really good parameters. Let's start with the S&P. So my guideline, and I think you'll find this something you can use. You can use this in all markets. It doesn't have to be the indices. It can be gold, crude, whatever you trade. But when you have a wide range conviction day, which this certainly was, my guideline is if it's real, any retracement anytime soon should not retrace more than 50% of that range. So that's the level to the downside that we start with in terms of, the level that would begin to bring into question an immediately bullish thesis. Otherwise, I expect to see new highs in the SPX and or NDX before there's any sort of significant retracement. Now, if you look at the SPX here, we're less than 1% from another new all-time closing high. That's easily reachable in one day. I'm not saying we will, but that's not a particularly wide range. And then if we go over to the NDX, it's the same thing. Here's your 50% retracement of the day's range, and we're about 1.8% from an all-time closing high in the NDX. And then the other indices, all of which are lagging, but all of which have the same downside level to keep an eye on. Now, in the Dow, this is basically an elevator shaft all the way back up to the 520 high. So if we continue to trade higher, you're not going to go to a new all-time high in the Dow without some sort of intervening balance pushback. Where this particular rally might stop, I don't know, and neither does anyone else. No doubt all the Fibonacci people will have 17 different levels in here, and it will, I guarantee you, trade within and turn from within a few points of one of them, because it almost has to, because there's so many of them. And then the Russell. Now, the Russell has a little bit more defined area. You have these lows down in here, not too far from Friday's low, and then the 50% retracement here, and then to the upside is 2113 level. Now, something also that's interesting to the upside in terms of, okay, if this rally continues, let's say into Monday into Tuesday of next week, where is there an objective level from price action that could potentially be a short-term stopping point, i.e. resistance? And the answer to that in this particular instance is yes. I'll show you. Now, market profile, I've been using market profile almost since it was posited by Stottlemyre in the mid-1980s. But market profile was sort of portending a sharp break last week. If you look at these closes, now this was the auction from May 15th into the 28th. And you had a remarkable cluster of closes. And I talked about this in last weekend's report. I invite you, again, to go to the website, check out what I was saying about that, about this structure then. But the closes in here were just remarkable. This was the close on the 15th. This was the close on the 28th. I think there was like 2 points difference over 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. This was all one auction. Now, these are individual day auctions in your typical market profile, day-to-day format. Let's combine this into the auction that it really represented. And here you go. Now, the apex of this is right at about 53.10. Well, what's special about 53.10? One thing is it's right at the apex of all this volume on the horizontal scale, and it's very recent volume. It's not like it happened 6 months ago. So it's very recent volume. And if we look at this level around 53.10, we can see, all right, this is 53.05, but we're within 2 or 3 handles of this would close this giant gap. So we have 2 very important pieces of information from a price action auction market perspective. So if we trade dead into this area, it's an important level to watch. It's an inflection point. It could be resistance. You could accelerate higher, but it is an important level to watch. And it's important because it's defined by price action. It would close this gap, and it's also from a market profile, auction market perspective, it is almost exactly the apex of this entire auction over the past 10 or 11 trading days prior to last week's midweek break into the Friday low that we had this dramatic rally higher, most of which occurred in the last half hour of the day. So that's where we are. Now, let's take one more look at something else that could be important. And the 10-day moving average, and I talked about this again in the report last weekend, these reports hopefully have some sort of consistency, coherency to them, and they go from 1 week to the next. I try to follow through with the information from the previous report so you follow the thought process and learn from it. But this is this chart is basically NYSE data. I use simple things. I don't use indicators, oscillators. These are moving averages of NYSE advancing issues. The red is a 10-day, the green is a 5-day moving average. Breadth is basically a histogram of closing breadth. The takeaway from this chart is that we had this momentum peak here, and then we had a unusually sharp contraction in the 10-day moving average of NYSE advancing issues for a very short period of time. And it contracted to a level from where you very often get very strong rallies. Now, it's not, as I put this in the report, it's not as bell ringing as is the level just below it. But you can go back and you can see it's pretty uncanny how even off of this secondary level in here, you have to be alert for the possibility of very strong rallies. Now, so we have another combination of factors, not just one factor, pointing to be at least being alert to the idea that the rally is about to continue, and it could be quite strong. We have the fact that we had the dramatic reversal days on Friday. We also have the fact that the moving average of NYSE advancing issues reached a level from where it's highly correlated. And you can go back farther than I've gone back here, and you can see even in this downtrend here, you did get a fairly sharp rally and then an even sharper rally off of this. So heading into next week, my working assumption is that the market's going higher as long as the 50% level of Friday's range is not exceeded by any of the indices. I hope you guys have a great weekend. Check out the website. Please like and subscribe if you found value in this. I'll speak with you again soon.